everybody, Bennett McDowell with TradersCoach.com. Great to be back at you this week for Stock Analysis Friday. All right, well, a lot going on today. I do want to spend a little time talking about where we are in the markets in general. We've gotten a lot of emails and questions from folks out there wanting to get really an opinion of where we think the markets are going, and I'm going to go over that in just a minute. I got to go through a few administrational items first. All right, a lot of news going on. You know, we had the Roe versus Wade ruling today coming out. The Supreme Court did announce it this morning. Markets were up over 600 points right now, so they're very bullish this morning. All right, so let's take a look at those charts. Before I get into that, just a few administrational items to go through. So let's go ahead and get started. Okay, first thing to cover, of course, are the risks involved in trading. Like I always say, without those risks, there is no opportunity. So the two really go hand in hand. And we want you to be aware of the risks. It is possible to lose some or all your money trading the financial markets or investing in the financial markets. Best to check with your financial advisor, accountant, or attorney before implementing any trade ideas we discuss here or any concepts, just to be sure they're suitable for you, because we don't know your personal financial situation, and of course they do. And then learn how to do risk control. You know, we can help you at TradersCoach.com. We have a whole host of books, and the book I'm going to really recommend for everybody today is the Money Management for Traders book on the far right. This is a really inexpensive, concise book that'll really tone up your risk control. There's formulas in there, but also the concepts you can implement right away into your trading program. So I think that's really important to focus on that, of course. Also, too, the book on the far left, A Trader's Money Management System, is a very comprehensive book. So look at the Money Management for Traders green colored book as kind of a cliff notes of that book. And then, of course, we have other books on technical analysis as well. We're going to be looking at charts using our proprietary software called the ART, OWL, PTF, TLM, and ERI indicators. We have scanners, we have risk control software. You know, we've been doing this for a really long time now. So this software is really honed down to give you the kind of quality entries and exits you would expect from somebody being around this business for so long. So definitely check that out on our website. All right, and finally, like, subscribe, share. You guys are doing a great job with that. Keep doing it, because the more people we can get here, the better. Also, too, go ahead and feel free to type in your stock picks for today, and I will take a look at those after I cover the market in general. And type those in caps for me, because it really helps me see them better. And we want to thank everybody for attending. All right, let me go through a couple charts that I prepared last Sunday, and then we're going to take a look at some of the active charts today. All right, so let's jump in first to a chart that I prepared actually back in May on the long-term forecast for the market. Now, we'll be updating this chart again in July. So if you are a Market Opportunity Report subscriber, which basically is our main subscription for keeping track of the markets, we meet weekly, and the idea behind that service is so you know what's going on with the market. So basically, this is going to give you just a quick reveal of what we do think is going on. Now, I'm going to grab my pointer here and just kind of give you an idea of what we think is happening. We think wave 3, this is a weekly chart. So this is a long-term chart. Every price bar here represents a full week. We think we began a wave down. As you know, we discussed a short position a long time ago, months ago. So if you're in that, you're doing really well. And we still think we're so far in a wave. Now, we're having a bullish week this week in the markets. I'm not convinced that a wave is over yet, and I'm going to show you why in just a moment. It could be, but the probabilities are not there yet to say it is. So I still think we're in a wave. We're close to the bottom. I think we got one more low to go before a wave ends. And then we're going to begin a very lengthy bullish B wave. And B wave is an interesting wave because usually people that get excited about the fact that there could be a bottom in on the markets on A wave, jump into B wave. You got shorts covering. So B wave is kind of one of those waves that actually has some enthusiasm behind it, but it is kind of a fake out because it's not the beginning of a new trend. It is simply a pattern in the overall correction. And so B wave is a bullish pullback in a downward correction. And then after B wave ends, then you have the devastating C wave that takes it down into the target. Now, we do think the target for this correction is going to be between a 38.2 retracement area for a fib all the way down to 61.8. And that's going to bring prices pretty much from the high down to 23,273 to 15,014. So pretty significant. Now, this indicator here, which is our proprietary PTF indicator, is red. 75% accuracy, and basically it was triggered during the COVID low. So basically what that is saying is on the next correction, there is a 75% probability of eventually getting below that. So that's what I think is in store for us. I think this correction is going to be a multi-year correction. I don't think it's going to be over this year. I don't think it's going to be over next month. I think it's going to be a while. All right. Could be a year and a half, could be 2 years. And then, of course, once we get down to this target zone here, usually everybody's so beat up by then, they want nothing to do with stocks. And that's where a bottom starts to form and we climb out. Now, it's going to take a while to climb out and get above the high that we've experienced this year or late last year, rather. So it's going to be a while before we get back up there. So get your portfolios in line. All right. So the next chart I'm going to show you is another one I prepared. And this one was from the weekend of last weekend. And basically it's indicating the wave count inside a wave based on the daily chart. So hopefully I'm starting to answer a lot of questions I see coming in about the market. So there are 5 waves in an A wave. So then what we're talking about here, of course, is Elliott wave. So we've had an Elliott wave 5 put in on the daily, we believe. And that would, of course, be the 5th wave inside that wave 3 we just looked at on the weekly chart. And A wave also has 5 waves in it because it's an impulsive wave to the downside. And this is the configuration for that particular move down. And of course, now we're into the target zone. So we think we're in a 5th wave down here. So now the $1 million question is A wave over? We're in the target range. It's certainly possible that it could be. However, when we look at the 60-minute chart, which is this chart right here, we notice that we have a big move down with the wave 3. So there is a possibility we could get a wave 4. And if you remember, I think last week I was calling for a rise in the market to around 32,000. And, you know, we're at 31,325. So we may have a little more room to go before wave 4 ends on this 60-minute chart. Now, when I say 60-minute chart, what does that mean? It means that each price bar represents 1 hour or 60 minutes. So every time frame I've shown you up to date here has been a different time frame, because when you use Elliott wave, that allows us to look into the underlying structure to see what the wave count is on each time frame. So I think what's going to happen with this, and Key, hopefully this will answer your question. I think basically we might have one more move down for the final leg on A wave, and then A wave should be over. So I think we're close. Now, if prices get up to this area here and keep going and take out a high, then A wave could be over. So we're going to have to watch that. But I don't think that's the higher probability scenario. So let's go ahead and take a look at the live market right now. Now, when you look at my screen here, you're going to see the 3 charts. You're going to see the 60-minute over here. You're going to see the daily here, and you're going to see the weekly here. So this is the long time aspect of the market we look at, the weekly chart. This is the intermediate. And of course, this is the short term. So any symbol that you give me today, we're going to analyze it using multiple time frame analysis, which is looking at the short, intermediate, and long-term trends. So on the Dow here, let's take a quick look here. So we've got a situation here where we hit that target range as we saw. We're coming up on the 60-minute chart here to the wave 4 fib retracement. So if you remember that chart I was showing you before, that wave 4 needed to get into this area, and you have to have a green owl This stands for optimum wave locator. That is a proprietary indicator we use for momentum and Elliott wave counts. So it looks like to us we're going to have one more leg down. All right, and that should complete a wave at that point. So we'll see what happens with that. Now, if we get above here, then a wave could certainly be finished. So we're right at this point of inflection, right inside the fib retracement now. And now we need the market to talk to us and tell us that, hey, are you going to go really above this, or are you going to end at some point between these two blue lines? So we're looking at probably a high of possibly around 32,000. We should see an end sometime before then. Any questions on this before I go over to actual stocks? Key, hopefully I answered your question there, okay? So one more possible low in a wave. All right, let's hit it, okay? Stuart, how are you? All right, Amazon. Let's take a look at Amazon here. Give that a second to load. And Stuart, I don't know if you're long, short, considering a trade on this or what you're doing, okay? So Amazon currently bearish long-term chart. So any rebound we see here should be temporary, okay? Should be temporary. So at this particular point, I see probably some more lows on Amazon after a brief pull up to around probably 130 to 140. That's kind of what I'm thinking about that. All right. Now, it could, let's draw quickly some fib retracements in on this daily chart here and see what this is looking like here. You actually already hit the retracement zone here. So this may have retraced already. So if this starts to sell off again, then probably it's going to go right down to a low. So you got to kind of keep an eye on it. The other scenario in terms of Elliott wave, this could be a 3A, B, C, go back into the target range, deeper on C wave, or this might be it. Now, my personal opinion on this, I see no real ABC pattern in here. So I think this is going to be a broad-based correction. So my personal feeling is that this is A, B, and probably going into C. So I think we're going to come up a little higher and probably end somewhere in the 126 range again to 143. I would think we're probably going to get around 135 at a minimum. Okay, so that's kind of where I'm at on that. All right, Snap, and this is for Hat Trick. How you doing, Hat Trick? All right, Snap, SANP. Let's see what's cooking on this bad boy here. Give that a second to load. Okay, so Snap has obviously been selling off. All right, tremendous trade to the downside using even just the daily chart there. So again, what's interesting is when you have the right tools, you kind of get a sense of what's going on with this. So we got a bearish pyramid, we got bearish momentum on the owl, we got looks like a big move down. We got everything is red down here. PTF is saying more lows. So I don't think any type of rebound here is going to be anything more than a rebound. I think we're due for a rebound, however, because you certainly have bullish divergence building in here. So I think you probably could see a rebound before it moves back down, but that's all it's going to be. So best case scenario, I think it's a little early to say it's in a rebound, but let's just draw where a fib retracement could be. So we're probably talking around, give me 1 second. Let me just center that a little better. At some point, probably around 37 to 53 on a rebound, which is quite significant and certainly worth the trade because it's at 14 bucks right now. But I'd be a little hesitant about going in until this turns green. Okay, it's a little early. We're in a little bit of a channeling. It really hasn't taken out the base yet. If you look at this a little more extensively, you know, this is not even this support on the way down has not been taken out yet. Okay, so I would be a little reluctant going into a long trade at this point, but I'd put this on your watch list. It's not a bad one for a watch list because if it breaks to the upside, and you can get in early enough, you could double your money on that one. Okay. And so that's SANP for hat trick. All right. Nova, N-O-V-A. Let's take a look at that. All right. Let's see about Nova here. All right. Notice how a lot of the markets now have come down so much as the markets previously sold off. So they're all ripe for a rebound, which is kind of what we're getting ready for as A wave finishes up here on the overall market. So in this case here, I think probably you've got a case for a bottom possibly being in here. Okay. So I think probably a trade to the long side could be taken. You got green here, no red here, no red here, no more red here. This is starting to go up as well. So I kind of think at this point, this is not a bad long trade. Now, notice, do you see the yellow colored pyramid forming here? It has not yet been confirmed. It won't be until you get over the top point of that pyramid called the apex. So in a case like this, this is a situation where you could wait for the pyramid to confirm, or you could go in super early now, but I'd put your stop here at the very, very bottom. So I'm going to say basically so far, this is the best one we've looked at for a long trade. Okay. Like that one. Good job on that one. Let's take a look at PATH, P-A-T-H. Okay, so this is another good one. All right. And this one already basically has generated a signal at this point. So again, keep your stop low. When you get in the beginning of a reversal, you got to put your stop at the very bottom because of the volatility or pullback that you could experience for a wave 2 pullback on this. So I would keep this, or a B wave. So I would keep this. This is a really good one too. Let's put this one down, PATH, as a long trade. Now, the only thing going against you big time on this is this chart here. You've got a red PTF and a red PTF. So you can't, would have to cut your trade size. The other thing I just saw on this is you got this red here on the 60. So actually this would keep you from going in at this time. So this has to turn green, or at least you have to have a pullback in this market and turn it yellow before you can actually go in. So this is not as good as Nova because of the red PTF that you have on the 60-minute. So this is a no-go right now. And this is the advantage you see of looking at 3 time frames. If you looked at only this one, it looks like a great trade. But when you take into account that you have a possibility for a 75% probability we're going to pull back down, that kind of negates the trade. And then also, too, you got to be careful here because you have such extreme momentum represented in this owl up here, along with this, that any long position is going to be temporary. And with this kind of strength here, the problem is you may just get a little blip and then a move down. So there may not be a big retracement yet on this. So you'd have to cut your trade size significantly, even if you're going to take a long trade. But this is a no-go because of the red PTF on the 60-minute chart. Other than that, it looked pretty good. All right, good, good, good. Excellent. So Dan, hopefully that answers those questions on this. All right, let me keep going here. XBI. All right, and this one is for key. XBI. Give that a second to load. Okay, so let's take a look at this one. All right, this is not a bad one. Okay, not a bad one at all. On this one, notice the 60-minute chart, no more red. In fact, a lot of green, right? So this still red. So we got to be careful. An active short position is still in the long-term time frame. But I wouldn't be surprised if this is now not a bad one for a move to the upside. So XBI is a good one. Let's see where we can get a target on this. And for that, I always go back to the beginning of the downtrend. And then I think probably we're looking at this as probably being a 2. So let's draw our fib retracements from there. So I would think probably about $92 to 111, and we're sitting at 74. Okay. Only issue with this, of course, is at this particular point, risk to rewards not quite as high as we want, but if it gets to this upper tier, it certainly would be. So, this is okay. All right. Just, you're going to have to set your risk to reward. Try to stay in it as long as you can on this one. So this is probably going to be a nice little rebound on there. And that is XBI. So key, stay long. I don't know where you got in, but keep your stop at the bottom of this pullback and you should be just fine. Keep it low. All right, John, how are you? SAFM. Let's take a look at that one here. Let me retype that. Okay, there we go. All right, so SAFM. All right, let's see what you're doing. You're long on this one. All right, so here's the way I would play this. You got a fairly extended trend in place already on the shorter time frames. So your stop can be right at the bottom of this pyramid. At this point, you are in a nice move up on the weekly. You've had a lot of pyramids on the 60-minute. So this is how I usually play this. If I've made good money very quickly, the market's given me a gift like this trend. Look how much that's moved up from 175 to 214 in a month and a half. That's kind of a gift, right? So you're going to get a retracement off that. You just normally do. So the idea behind this is that I use the 60-minute chart to help me scale out, manage my scale outs on this. And you can also use some of the signals up here. So your stop on the 60-minute chart can be as high as 205, a little bit higher than this pyramid. But if you look also on the daily chart, you've got a greed bar forming and you've got a 1B down here. So you could put your stop to scale out right below that greed bar. And that greed bar is put in by the ERI. All right, so you could use that for a scale out. You also have the trend line master, which draws trend lines automatically on the chart. And this is the software that's available from TradersCoach.com to also scale out. So I would kind of stay long and keep your stop for your positions here, but scale out a little bit, maybe a third, maybe a half, if these signals here get hit. Now, if you look at the weekly situation, you've got a green PTF, so you got more highs coming, but you're also seeing bearish divergence starting to build. Now, that doesn't mean it can't go on a lot longer to the upside, but that's something you need to take note on. So I think a scale out here might be appropriate. You're seeing a little bit of bearish divergence here as well, but I do think there's a lot of strength still left in this. All right, so that's how I would kind of play that at this time. Notice that the PTFs on the daily and 60 just went yellow, so they're neutral now. So there wasn't enough momentum to keep them green. That's also significant. So I think a scale out at some point here would be appropriate, okay? All right, so let's keep going here. John, DQ. Okay, so DQ, let all that load there for a minute. DQ is looking pretty good, starting to move up again. All right, pulled back, got channeling for a little while, but now it seems to be, hey, doing all right. Okay, so what's interesting here on this one is, again, the market's given us a gift pretty quickly on this move up. And you can certainly see that now we are in a pretty solid move to the upside. What's interesting is on the 60-minute chart, notice that this would normally look like a 3, 4, 5, but notice the owl now is higher here than it was here. So it's actually still in a 3. So this would have been a minor 4. So you're going to have a pullback. You may be going into a 4 now. So you may get a retracement, you know, down to this area here. So you got to be kind of a little alert on that. So here's the way I would play that. If you went in the first leg up on the way in, always has a significant retracement. Could be a fib retracement or could be a 100% retracement. Do not use the pyramids on the first leg up if your intentions are to stay in this trade a longer time. The pyramids are designed to keep you in the different swings of the market only. But if you're going to make it into a more significant move way up here, you need to keep your stop down. And so that's where I would have it. You have green here, green now here. I think you can be a little liberal on keeping that stop back under the bottom there. And that's what I would do, okay? So I'd stay with DQ if you're long. Now, if you're not long with it, well, you still got enough profit to take a trade at any time, but you may wish to wait for a pullback before getting in. That's a possibility too. So let's say you wanted to go in with 500 shares, maybe go in with 250 now, wait for the pullback and then go in with the other 250. Do something like that. That way you don't miss it if it keeps going up, but I do think it's going to pull back at some point and give you a better price. Okay. That's kind of my thinking on that. All right. So let's keep going here. How about, let me take a look at a crypto. All right. GBTC is an ETF that everybody kind of tends to follow with crypto. So we'll take a look at that too. You know, as I said, once this bottom was taken out here, you should not be in cryptos. And that still stands. Okay. Cryptos right now is not the place you want to be. And I want to show you something here. Look at this. Green to red. Okay. So now there's no more incentive for a long trade at all on crypto. So I'd stay away from it. Do not take it. Okay. Cryptos for right now are dead. And with that red PTF, it's not finished coming down. Doesn't mean it can't recover at some point, but I have no idea when. And at this particular point with a red PTF in the long-term charts, you don't want to touch it. Just leave it alone. Okay. The other thing I want to take a look at is real estate ETFs for a minute. There is a softening going on in the real estate market. We've seen it. However, the long-term charts are indicating that we may still see a recovery unless that PTF turns red on the far right-hand chart. So this is an XLRE, RE, which is a real estate REIT type of thing. And we do have so far a red PTF that may change and go green, but it's red right now on the 60-minute. So let's see what happens with real estate here. All right. It definitely has softened since the beginning of the year. And also, too, if you look at the inverse real estate funds or REITs, you can see those are bullish right now. All right. But check this out. This is still red. So if this goes down, then that's good for real estate. However, it's showing that we're still in an area where we're going to probably have another high. So I think we're rebounding here. I think what I want to do for you all here is draw in a possible fib retracement area. So let's do that. And I don't think it's going to be quite, I don't want to draw that way up there. Let me just finish. Let me adjust that. Give me a sec. Let's draw that off at wave 2 here down to here. So probably between 28 and 40 is what we're going to see. So I would imagine a little bit more softening in real estate is going to happen for sure. Okay, so we may be in a correction at this point that's going to last longer. So that's kind of my take on that. All right, did I miss anybody? Going once, going twice. Anybody else? I think I got them all. Gene, let me know if I missed any, but I think I covered them. If I missed any, type them in now, okay? And then I'll take a look. So that is the real estate fund here. Let's take a look here at the NASDAQ real quick. That, of course, has corrected quite a bit, as you can see, and is not done yet. So weekly chart, again, still very bearish, but we are due for some type of bounce, and that's what we're getting now. So there you have it. All right. So John, Eleanor's birthday is today. Happy birthday. Okay, I think that's it for the day then. Okay, short and sweet, but I think we covered a lot of good stuff. All right, so everybody out there, I hope you're doing great. Enjoy the summer. And the markets certainly are volatile, and it looks like interest rates are probably going to go up maybe 75 basis points again next month. So that will be kind of interesting. Sure, let me take a look at the S&P. You're not going to find the S&P much different, Bill, than the Dow, but let's take a look at that. And if I can find it, there it is. All right, so we'll take a look at the S&P, and that has also been pretty much similar to what the markets are doing now. Key thing is your overall correction is not over, but we're due for a rebound, okay? And that's kind of what we're probably seeing right now a little bit. But I do not think the rebound is a B wave yet. It has to go. It's too early to tell. Right now, it seems like it's probably going to, it could go down one more time, even on the S&P, of course. Okay, so that's kind of where we are there. All right, anybody else? Going once, going twice. All right, you guys enjoying this? It's kind of fun to get together once a week and go over these. So I think I want to go back. Let's go back and take a look at the two I think that are pretty good here. And that's Nova, N-O-V-A. Let me load that one. And this is one that I really think is primed to be a pretty good long position. If you wanted to go in now, you certainly could. You got to put that stop at the very bottom. Or if you want to be a little more conservative and wait for this pyramid to form, you could go in there and then put the stop here. Okay, that's another way you could do it. But this is okay. All right. Nova's a winner today, and XBI. Let's take a look at that one. Who had Nova and who had XBI today? All right, so this one also looks pretty good. Okay, this one looks good for a take, I would say, right now. And then also too, put your stop down here, and your target would be up here. And then the other one was PATH, but it's not ready yet. Could be ready next week. So let's make sure we look at that one next week. All right. Let me see. So Dan, you found Nova, right? And then Key, you found XBI. So pretty cool. Good job, guys. All right. So those are the two picks for this week. All right. Have a great week. We'll see you back here next Friday for Stock Analysis Friday. Take care, everybody. Hey, for fun, I'll just put the intraday time frames up on some of the stocks here. Let's just let this run for a little bit. We'll put the E-mini up. It's been kind of this is a 1 minute time frame in the center, 5 minute on the right, and we've got a 15-second over there. So kind of a messy market after a nice move up this morning. So I'll just keep that there before we end. All right, have a good week, everybody. Thought I'd come on one quick second and just for those of you still hanging on this trade, this would have been a great day trade, you know, early in the morning. This is a 1 minute chart. So check this out. Early in the morning, took off. Pyramids did a great job. I think we're going into a correction now, and I've drawn in a couple of little things. But this was a great kind of scenario of Elliott wave with the waves inside the wave. So 3, 4, 5 probably completed here, which will complete wave 3 here because there's 5 waves inside wave 3. So now we could be going into a 4. We may make one more high, okay, before going into it, but that's kind of the way it's shaping out. We need to go below this area here to really solidify that wave 3 is finished. So the idea is once it gets in here, think about a long position back to a high of a 5th wave here, which will end the wave 3 on the 5 minute chart. So that's kind of just a quick synopsis of reading the intraday charts using multiple time frame analysis. It's kind of cool. All right, but the real trade on this was early at the open. Again, Pyramids did a great job with this. Now you don't want to go long here. Too much bearish divergence, too much correction. Eventually, it's going to happen to this area. Even if you get one more high here, that's probably going to be it. So there's no real reward to go long here. There's more risk, actually. So, I mean, if you wanted to try to trade down here, you could do that, or you could actually wait for prices to get here and then enter a long position, and you probably will be going in sync with what's over here. So that's just kind of a quick synopsis of day trading. If you like this kind of stuff, don't forget we have the day trading room Tuesdays and Thursdays for this stuff. All right, so see you next week. Thanks.